Ladies and gentlemen, good day and welcome to Time Technoplast Q4 and FY24 earnings conference call hosted by PhillipCapital India Private Limited. This conference call may contain forward-looking statements about the company, which are based on beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be no opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikram Suryavanshi from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Thank you, Lisa. Good afternoon and very warm welcome to everyone. Thank you for being on a call of Time Technoplast Ltd. We are happy to have the management with us here today for question and answer session with the investment community. The management is represented by Mr. Bharat Kumar Vagheria, Managing Director, Mr. Raghupati Tyagarajan, Whole-Time Director, Mr. Sanjeev Sharma, Whole-Time Director, and Mr. Vishal Jain, Non-Executive Director. Before we start with the question and answer session, we'll have opening comments from the management. Now I hand over call to Mr. Bharat Vagheria, sir, for opening comments. Thank you. Over to you, sir.
Thank you, Vikram, to you for introduction of entire management team, including the board members. And good afternoon to all of you, my existing and the valued and prospective investor. We are here to talk about our results of Q4 and full financial year ended 31st March 2024 and outlook for the next year. In fiscal 2024, our revenue grew by 17%, driven by increased volume and strong demand for our value-added products. Our established product lines such as drums, jerrycans, PE pipe, etc. experienced a stable 12% growth. Meanwhile, our value-added products including IBC, composite cylinder, LPG, CNG and the MOX film saw an impressive 32% growth, now constituting 26% of our product mix. Our operating margin remained stable at around 14% thanks to our ability to pass on raw material cost fluctuation and the exchange fluctuation to our customers. Looking ahead, we anticipate that continue this growth momentum at least for 2 years and targeting around 15%, fueled by steady growth in our core packaging business, expansion of our composite cylinder segment which includes LPG, CNG, oxygen. I am not again clarifying hydrogen cylinder, it is under process of development and approval, that not projected because commercialization will take place after March 2025. So our core markets in FMCG, specialty chemicals, construction chemicals, paint, pharmaceutical continue to exhibit strong demand prospect, positioning us well in future growth. As last call also I have said that India and other Asian countries where we have existence, we are getting the advantage of China plus shifting the business from China to other Asian countries. At the onset, I would like to inform you that the board of the directors recommend a dividend of 200%, 2 rupees per share. Previous year it was 125%, 1 rupees 25 per equity shares and face value of 1 for the March 24, subject to approval of the shareholders, resulting in a significant increase by 60% in the dividend outflow. You recall my call last time, as the company's earnings are increasing, company would like to improve the payout ratio and on that direction management is working. Therefore, it is increased the dividend from 125% to 200%. Coming to the financial numbers, the results are already announced. I will just walk you through some of the key financial numbers and operation light. You recall my last conversation call where I have said whole year profit, which was for March 2023, company had achieved in 9 months. So this quarter 4 is a bonus for this year compared to last year. You will see that net sales stood in this quarter 4 is 1405 crores. This is the highest in a quarter in the life of the company, as against 1193 crores last year. EBITDA 197 crores as against 170 crores last year. PAT 92 crores as against 64 crores. In terms of the percentage, you see the net sale increased 18%, which contribution from India 19%, overseas also 16%. Volume increased 19%, India 20%, overseas 18%. So India and overseas is running in the same pace around with the gap of 1 or 2% here and there. EBITDA increased 16%, but you will find because of the utilization of the assets efficiently, because of the use of the funds very effectively, the PAT is increased by 45%. The EBITDA and PAT stood margin 14% and PAT margin 6.6%, where you will find a substantial increase as against 14.2 and 5.3. We state 1.3% gain in the PAT is on account of the depreciations and the interest rates. Increase in the freight cost due to the geopolitical issue in the Middle East region and due to high business in the PE pipe division having especially wide, that is also 10 or 20 basis points in the last quarter, is not material because in the particular PE pipe order we take on the fixed price basis, but they make the fluctuation and taking the time gap between the passing on to the customer. But you see the half yearly results or something, you will average out. There is no any major difference in the profitability part is concerned because company is having a B2C business directly where the price increase also pass on to the customer and price decrease also we pass on to the customer. During the year ended 31st March 2024 on the consolidation basis, on the yearly first time we crossed 5,000 crores, 5,007 crores as against 4,293 crores last year. EBITDA, as promised, crossed 700 crores, 705 crores, which was this thing, and guidelines was for 700 crores around. As against last year was 581 crores. PAT, 311 crores. Guideline was there for around 300 crores. So everything is surpassed from the guidelines. As against last year, 219 crores. In terms of the percentage, net sale increased by 17%, volume 19%, EBITDA 21%, but PAT increased by 42%. Now, share of the business, as we have seen the above results, the value-added product grew by 32% in FY24 as compared to FY23, while established product grew 12%. The share of the value-added product is 26% of the total sales in FY24 as against 23% in FY23. In the last conference call, I said that in the next 3 years' time, we will see, in spite of growth in each of the products, value-added product sale will be 35% of our total revenue. Because the value-added product and composite product will grow 30%. Other legacy product, established product, in line of the other industrial base, it will grow 10 to 12%. Now, share of the India and overseas business, which earlier it was 70% India, 33% overseas, but now I am glad to tell you the 67% India and 33% overseas business, as against 66% previously, 66 and 34. EBITDA margin and India and overseas is 14.4% in India, 13.4% in overseas. But because of the average taxation rate is low in overseas, the net PAT margins is more in overseas market compared to Indian market in terms of the percentage. Now, I am glad to tell you that companies focus on the debt reduction. So you will see that net of the cash as on 31st March stood 591 crores, total debt at 745 crores as against 709 crores previous year, and total debt 810 crores as on 31st March 23, a reduction of 118 crores. I would also like to bring your attention, we all are aware that in the current financial year ended 31st March 24, there was a 3 continuous holiday at the end of the year, that is 29, 30 and 31st. In spite of that, company able to manage their resources very rapidly, but it would have much better if company would have got 3 working days continuously. The management continue to focus on the further reduction in the debt and aim to become debt-free in the next 2-3 years' time. The capex incurred during the FY20 well within the budget, 181 crores only, which includes 77 crores towards the brownfield capacity expansion, re-engineering, automation, establishment product, extra, and 104 crores towards the value-added product, mainly for CNG cylinders and the IBC. The total capex in the future is estimated in the range of, as I mentioned in the last call also, it will be less than 150 crores, which includes automation, re-engineering, because to maintain the cost, the company need to replace the machines, mold, etc. Return on capital, I am pleased to inform that it is improved to 16.4%. In fact, I recall my conference, I said we will achieve 16%, but it is now 16.4%. Last company promised in the 2 years' time to reach 20%, so we are on that guidelines only. And to achieve this, company is implementing strategies such as increase in productivity through automation, re-engineering, cost reduction, implementing power-saving plants, enhancing capacity, brownfield expansion, increasing the revenue shares of high-margin value-added products, etc. During the year, management has identified certain non-core assets. I have given that information in the month of December, and on that onwards, efforts are continued. At that time, the assets were 125 crores, which is now reduced to 90 crores. And as company is estimating to liquidate its entire non-core assets or utilize that prior to 31st March 2025, that also fund will be utilized, part of the capex, part of the debt reduction, and part of the increase of business of the company. I would also like to inform you, everyone, that one of our subsidiary company, Net Energy Limited, we are working towards the development of technology, advanced TBS or transparent container batteries, e-rickshaw batteries in lead acid and lithium at the existing manufacturing facility. This development will happen in the current financial year, so that benefit can be occurred in the period ahead when the e-vehicle rickshaw volume will increase. It's a huge potential, very big market is there, so the development is undertaken. Transparent container battery is a type of the lead acid batteries commonly used in power segment for backup power system and in other applications requiring reliable and long-lasting energy storage. Coming to the consolidation from restructuring overseas business in the Middle East, which we have announced that already agreed to sell 50% of that business in $25 million. The process is on. You are aware this call is for the audited financial results. We can now hand over our audited accounts to the overseas businesses, to their nominated agency for due diligence. So we are expecting this transaction to be completed in June. And that process already they announced, it will be used for the debt reduction and the benefit to the shareholders as per the board decision. In the quarter, the company received the approval from Petroleum and Explosives Safety Organization (PESO) for manufacturing the high pressure Type 4 composite cylinder prototype for hydrogen. We are first here in India to have received this manufacturing approval. I think we are going to give this good news instead of 6 months. You will going to hear in the next 2 months' time more, because most of the process is time process is on, and we should get approval for manufacturing also in the next 2 months' time. Now I would like to open the floor to answer a specific question, if any, which is not covered in my speech.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Sareen from K16 Advisors. Please go ahead.
Good evening, management team, Vagariya Sahab. Congratulations on a very good performance once again. The last couple of years, you have completely transformed the company. So many congratulations for that.
Thank you.
I just wanted to know, normally in your presentation, you give the breakup between, between the composite, you give the sub breakup that how much is CNG revenue, how much is LPG revenue. This time it has not been given. So maybe it is oversight or is something. If you can share, that was my first question.
Yeah.
Second question, if you want, or you can answer and I'll ask the second question later.
Yeah. Then you can give me to the next question, so I can give you answer of both. Meantime, I will ask my people to give me that information. Yeah.
Sure. I'll ask. Now, also when one looks at the segment, segment capital employed, the capital employed in composites has gone up, quite sharply. It is now 853 crores, and even the previous year figure, which used to be 477 crores, is now restated to 802 crores. Now, this is significant change. So if you can throw some light on, what is the correct picture and how we should look at it.
Yeah.
That was the second question.
Yeah.
And the third was that there is a sharp increase in other income during the fourth quarter results. So if you can also elaborate on that. So these were the three questions.
Yeah. Okay, fine. Good, Amit, I think. First you ask about CNG and LPG separate figure. Due to oversight, because yesterday long meeting was there because new directors also inducted in the banking sector. So I think so every result was out, so we thought timely we should give that earning presentation. In case of especially CNG and LPG, which was projected and we did achieve business of LPG 210 crores and CNG 308 crores. So total is 518.
So 210 crores and sorry, what LPG?
210 crores for LPG.
Okay.
And 308 crores for CNG casket.
Okay, this is for the full year.
Now,
this is for the full year.
Yeah, for full year. Fine. Now, you are asking me the composite cylinder which the investment up, because you know that our expansion plan announced last year, which is in process, for which the company need to do the investment of 125 crores. Okay, said order advance already given, and that expansion is going to come this year. Almost around, I think, 70 to 80 crores payment have been capex already done on account of composite cylinder, which mainly for LPG and some of the equipments for development of the hydrogen cylinder. Revenue of this will come in the period ahead. Half of the period can come this year also. So mainly increase on that. Another thing, the composite, which includes the IBC also. We have seen that company, one of the subsidiary company, that is TPL Plastic, has completed the project in Dahej area for manufacturing of the IBC, where they can generate the annual revenue of almost around 90 crores. That revenue has come only part of the period, 5 months of the financial year 23-24. Therefore, the capital to revenue is not showing, but if you exclude this investment of CNG expansion plus equipment of hydrogen plus Dahej investment of the subsidiary, including land, building, plant and machine all put together, roughly I can say around 125 crores you have to exclude, which revenue will come in the period ahead. Then it will be comparable. Right?
Okay.
Now, you asked me about the Q4 other income. Yes. You see my declaration and information provided earlier, that company has realizable value, non-core assets, 125 crores identified. Okay. Out of that, two decisions were taken. One in southern region, one in the western region. That also I have updated to NSE, BSE. Now, one transaction which was free, land and buildings were available, that have been completed, and that location has given the profit of around 10 crores on account of additional compared to book value. So this other income is inclusive 10 crores on account of the non-recurring income, right?
Okay. So I had just one clarification.
Yeah.
The last year capital employed, was 477 in composite.
Yes.
So that restatement I did not understand.
Okay, I think what I can do it, Amit, I will ask my people to work out the details, and if you can provide details to my IR manager, Mr. Digvijay, they will provide you quite details in working, and I will give the details, because exactly details I don't have available, the investment composite, what they have taken in composite, because composite product which we cover, IBC product, which covers the steel drums, then we cover the LPG, CNG, and auto segment. Okay, that's all covered under the composite products. So as far as capital investment is concerned, to which I remember very well, therefore I have explained to you, but remaining if any there, they will find out, they will recheck and confirm to you.
All right. Just one thing, if I may, one more question, if I may.
Yeah, Bullet.
You are doing a great job on the gas station front, the composite. Every year you increase quite sharply, and that is visible for everybody to see.
Yeah.
When are you going to get into vehicle gas cylinders? Because both Maruti as well as Tata Motors have big plans. So I was just wondering, are you economical enough? Is there any cost analysis done which makes you suitable for those vehicles?
No, suitable. Amit, it is suitable. It is approved by PESO authority. Now, I have mentioned last time also, when my expansion of the cylinder manufacturing capacity will complete, then we will go to the automotive industry where they can replace. And advantage, there is a huge advantage of using the composite cylinder instead of present metal cylinder, because that becomes a lighter. Okay, and then they can carry the more gas. The bar pressure, which is our cylinder, composite cylinder, bar pressure is very higher side. So that all will give the benefit, but that we will approach. In fact, approach already done, but some drawing works, detailed discussion, that all is ongoing, because we know that automotive sector's approval itself take 8 to 12 months time. So we have initiated talk with them, design taking everything. Approval is already there. My 56-liter cylinder is already approved by PESO authority. But one thing I am just clarifying you. Instead of selling cylinder plus gasket, I am doing some value addition. So I am adding the margin on cylinder plus complete gasket set. So we are getting the margin on that. Therefore, with the value-added products, we are selling currently. First target is to supply to the gas stations, from mother stations to the filling stations. And you know very well how big is the market. 20,000 crores market is there as far as CNG cylinder itself. Now, every day we are also, and you also must be hearing that so many CBG plants are also coming, and Reliance, Adani, many people are working on CBG plant. They will need this all types of the cylinder, CNG cylinder. And another, CNG is also a lot of things to be done in the increasing the capacity to storage of the more gas in one cylinder with the same type of the volume. That will come. You will see, I think by next year you will be able to see that.
Great, sir. Thank you, and wish you all the best.
Yeah, thank you.
Thank you. The next question is on the line for Ashish Khurana from NK Capital. Please go ahead.
Thank you for the opportunity. Again, from my side as well, big congrats to the management for walking the talk, and not only meeting, but in at least the operating metrics surpassing the guidance. Congratulations. So, sir, yeah. I was going through some of the previous calls, and I think Bharatji or Raghuji also mentioned a few seconds back I just wanted, one clarification on this opportunity that we talk about in the CNG cascade business. So the opportunity size mentioned is around, say, 20,000 crores. So the clarification I wanted was that is this 20,000 crores specifically for Type 4, or is it combined Type 1, Type 2, Type 3, Type 4 that we are talking about? And if it is
it is the entire family of applications for CNG, which will include the cascade as well as the automotive applications, plus of course the Type 1. When we talk about 20,000 crores, it will be the current demand that is applicable.
So this is across all the types, and we are hoping that 50% of it would at least be Type 4, which would, which probably will, have a big chunk of it from that.
That's right.
But Ashish, one again, I am clarifying you. It's for the new market. I am not considering the replacement market. You know that CNG cascade of metal cylinder is available for more than 25 years in India. Okay. So we are not considering, this is only based on the government guidelines and government policy of October 2020, where their station have been allotted 8,100 stations, and we are considering 2 cascade 1 station, which itself is a market of 12,000 crores. Then there is a MRU, mobile refilling unit is there, compressed biogas is there, then automotive industries are there. So 28 to 30,000 crore total market cap, each of the segment we are considering, at least 30-40% conversion will take place because of the advantage of using the composite cylinder. So as a company, as I have mentioned in my last call also, the composite cylinder business, which is currently in the 23-24 around 300 crores, which we are projecting in the next 5 years' time, it can be 2,500 to 3,000 crores, our company's own business.
Got it, sir. This makes it very clear. Thanks a lot. Secondly, sir, I think we have previously mentioned that the competition here is either, players who don't have that technology in terms of, say, the pressure levels that Type 4, our Type 4 cylinder can sustain, or they import. And I know in the previous call you have said that you have been trying to get a sense on the market size of, say, the previous FY. So what I wanted to understand was that even if, we do not have the exact market size, given the competition and what we have spoken about it, is it fair to say that, say, in the previous financial year, we had, say, over 50% share of the Type 4 CNG cascades that were sold, especially Type 4 that were sold in India?
No, in fact, when it comes to Type 4, we are the only manufacturer here in India. So I would say we are definitely doing, leading the pack for thing. There are very few people who have managed to import the Type 4 cylinders from Korea or Russia, but those are petered out, given the fact that we are now making it here and have the considerable advantage. Same is the case with Type 3 also. We are in a position to gain that advantage, and we will soon also be in a position to overtake them in terms of our presence.
Got it. Now, sir, coming to the LPG cylinder side, so we have an effective capacity of, say, around 1 million, if I'm not wrong.
You are right.
1.4 million.
1.4 million, but he's right, but 1 million for manufacturing capacity of the different sizes.
Because of various sizes that we have to
I agree fully with you, yes. Where we can generate the revenue of around 230 to 240 crores, right? Yes.
And in the last call, it was mentioned that 90% of it is utilized, but we are not actively looking to add to it because the opportunity might not be that lucrative, is it?
No. You know that I have clarified last time. As far as these LPG cylinders, government main companies are IOCL, BPCL, HPCL. You know that last 2 years only this business has taken place, right? So in the last 2 years, government, other companies, I tell them other companies also, like BPCL, HPCL, they are also small quantity we have supplied. And in the last 2 years, we and other producers in India both have supplied around 1.5 million cylinders in the market. And in addition to that, I mentioned that we have a capacity of 1 million sellable capacity. Almost 48 countries our cylinders are approved, and we are exporting 30 to 40% of our capacity export market also. Last year also we have added 5-6 countries more, and this year also we are projecting to add more countries. Because we don't want to depend only on the India. The business was set up because we know this product and we are in this product since more than 10 years in India. But Indian government did not took 2 years back. It just happened 2 years back only. But we are sure once the And that also you see as the India geographical presence.